Welcome back to the Daily Dope Show. I'm your host, Brando, the Weed Commando. And yeah, I guess that's pretty much about as clever as I ever get with my intros. And I'm not. I'm gonna. This is a disclaimer, real quick, before I proceed. I am not, by any stretch of the imagination, a financial advisor, accountant, um, stock broker, stockbroker, friend of or relative. I don't know anybody that works in the industry of investing. Um, and quite frankly, I'm not a huge investor myself. Oops, I'm not going to really get into the whole what I do with my money and shit, but I will tell you that a lot of people have asked me about how I feel about the investing in marijuana stocks, if you will. And a lot of people, I mean, some people follow different things on the internet like Motley Fool, so they got ADD when it comes to this marijuana stock investing thing. They just like they keep hearing things and they're like, whoa, what's this, what's that, and they're really reactive. Like a little bit of a movement on a stock freaks them right out, either good or bad. Like, oh my God, is this thing just gonna fall through the floor? Or holy shit, I'm in for the big ride, baby. Like, I kick myself in the ass for missing a few things over the last 2 years, we'll say. But I have taken an approach to what I consider would probably be considered insider trading in a way, but not really. And, if I characterize this as that, then didn't, I probably made a good case for someone saying that that's what this is. But I'm going to go ahead and give you some advice on this cannabis green rush that everybody keeps dreaming of. Now, the first thing I want to say right out of the gate is that this green rush is kind of it's like a little bit of a mirage. All right. Sure, there's going to be people that make millions of dollars and billions even eventually. That's just the way commodities markets are, man. If it's something that's in high demand, which in my vision of the future, marijuana demand is only going to go up. Medical marijuana is going to keep increasingly becoming more accepted and popular. And you know why? Because it actually works. And then you also have like these other companies that are making marijuana molecules into medicines of their own, which I don't really have a problem with as long as they're not lobbying to get rid of actual whole plant medical marijuana, which they actually are, and I'm kind of pissed about what they're doing. So yeah, we can talk about that. That's another video or another tweet, if you will, because I have this conversation on Twitter. But the bottom line is that I feel like the future is good. Like we're gonna hear nothing but good news. Sure, there might be a couple more Jeff Sessions bumps here and there or whatever, but the good news started happening in the marijuana investment world back in 2016, November, December ish, when after the election, things have just been going up. And now, when I'm talking about all this, just keep in mind that in America, we really don't have what's going on here. This is all Canadian stocks for the most part, and you'll see what I mean by when it comes to being marijuana sector publicly traded companies. Those ones are pretty much all in Canada on these ETFs. So first of all, and I've always told people when they ask me about these marijuana stocks, I've always said, pump your brakes because they're going to be going through a rough ride. And that was 2 years ago. Now in Canada, we're looking at October being when they actually do the legalization and sales begin. So after that, it's just going to be, it's going to be nothing but the numbers are just going to slowly be going up. So you're going to be looking at good long-term investments. And again, there's going to be some losers and winners. There always is in things like this. This is a new industry that's kicking into gear. And, if you were around like I was during the late 90s when the tech industry bubble blew up, and, there was winners and there was losers. And with that, it was kind of like you could predict it right away. Like as soon as a web company, a website popped up and you looked at what they did, you were like, oh, that's going to be a loser. Amazon, you were like, that's going to be a winner. Netflix, you were like, hey, that's not even a web thing. It's just you can call it on your phone if you want to, and they send you a DVD. But people back then in the 90s knew that eventually that's the way people was going to order movies on the internet and just download them, because we were already doing that. Anyway, I'm getting sidetracked. So what we're doing here is we're talking about marijuana investment. And so far, it's been a rocky road for certain companies. We've seen Canopy and all the other really big Canadian companies kind of like hit bumpy roads. But if you've seen what they were selling for back in 2016 when people first started asking me about this, and you see what they're selling for now, you would probably be mad at yourself for not investing. And I'm kind of mad at myself. But I don't really, I wasn't looking at a long-term investment thing at the time. Like, I'm not the richest person in the world, so I'm not kicking myself in the ass too hard. But anyway, what I did tell people, though, is eventually there's going to be a way to invest that is going to be streamlined. As in, there's going to be ETF that will have a bunch of marijuana companies in it. And now there are two of them. And we're going to talk about two of those ETFs today. And again, I'm not some kind of financial advisor or whatever. The inside knowledge I have is my prediction that this so-called green rush probably won't really happen, but all these companies are probably going to do better than they're doing today, especially after Canada legalizes, and then later down the road, which I predict isn't going to be too many more years, when the federal government of the United States takes marijuana off of Schedule 1, that's going to be a game changer. As soon, some people might be cynical by now, like I am, and say, well, that's never going to happen. And one of the reasons why some of these stocks are doing good is because some of the bad things that happens to whole plant marijuana. So when I'm talking about these ETFs, keep in mind that I'm the guy that always talks against the corporate takeover of marijuana overall, but I'm also the guy that's like, there's nothing you can do to stop it. So you might as well kind of help the the winners win that are the good players if you can. But overall, I think these ETFs are essentially a way that the average everyday Joe can profit off the corporate takeover that's going to happen. That being said, I don't think anybody should expect to get rich off of all this. Whether you're the company that's going to be the next big thing and whatever, or whether you're, this or that. And a lot of these profit margins and future, projections that these companies are, valuing their stocks on are kind of based on their profitability being based on the price of a gram being a certain amount. Depending on if that's the kind of company they are that sells actual bud and products made from plants that they grew. So, I'm thinking that they're all going to have a nice windfall here and another one there and all this stuff. But overall, they're not going to be like, there's not going to be a single, company or even three or four that's going to step out like a Marlboro and, I'm not sure. I don't smoke anymore. So, like Marlboro, Camel, and Cool or whatever, But anyway, all that aside, I'm just going to go ahead and read this. So it's high time for an ETFMG Alternative Harvest ETFMJ. As of August 28th, MJ was the top performing ETF over the past 30 days, rising a staggering 27.7%. This article is called Marijuana ETF Top August Performer by Laura Krieger over at ETF.com. This is not a marijuana publication. This is a publication that focuses specifically on ETFs. So much of that outperformance stems from a veritable boom in the fund's underlying stocks. In the last month, large alcohol companies have either bought significant stakes in marijuana companies or indicated an interest. So this is a quick summary right here of how the alcohol industry's investing in these marijuana companies has basically made their stocks all surge. And furthermore, these ETFs are, both of the ETFs I'm going to focus on has a lot of holdings, or has holdings in all these, so they're all going to go up. And that's what happened. So it all started last October when the alcohol beverage giant's Constellation Brands (STZ) acquired a 9.9% stake in the largest publicly traded marijuana company, Canopy Growth, a major provider of medical marijuana in Canada. On August 15th this year, Constellation announced it was spending $3.8 billion to up that share to 38%. Then in June, Heineken's California-based craft beer Lagunitas, sorry if I got that wrong, announced it was working on a THC-infused product. THC is the chemical compound in marijuana that produces its signature psychoactive high. Weeks later, on August 3rd, Molson Coors Brewing, TAP, announced it would partner with Canadian marijuana grower Hydropothecary Corp. To jointly develop cannabis-infused drinks for the Canadian market. And as if that wasn't enough, on August 24th, Bloomberg reported that Diageo, maker of Guinness beer and Smirnoff vodka, was in talks with at least 3 Canadian marijuana companies to either purchase a stake in those companies or entered a development partnership with them. The time frame for any potential deal was unclear, however. And then you have fertilizer giant explores deals. Yet it isn't just beverage companies lighting up the cannabis space. In late April, fertilizer giant Scott's Miracle-Gro inked a $450 million deal to purchase Sunlight Supply, a U.S. top hydroponic distributor. Hydroponics are devices that enable the cultivation of crops in water instead of soil. They're talking about they've long been used by marijuana cultivators. And Sunlight Supply, in my experience, is one of the main manufacturers, marketers. I mean, they basically have their hand in everything there is to do with hydroponics. And yeah, so Sunlight Supply joins Scott's Miracle-Gro's existing marijuana and hydroponics unit, Hawthorne Gardening, which the company has spent hundreds of millions of dollars in building out in recent years. I'm going to talk a little bit about these guys a little more later. But one of the things I don't like about these ETFs is that they have Scott's Miracle-Gro in there. But as I'm saying, you basically have to sell some of your soul to like buy into this, because it's the corporate takeover, it's Monsanto takeover that everybody's been talking about and freaking out about. I mean, I don't know if Monsanto is really capable of taking over through Scott's or Hawthorne the marijuana industry through like genetic whatever people like hypothesize about, like they're gonna somehow patent all the genetics. I mean, come on, man. I don't think that's a possibility. All right. And I mean, I have genetics that I've made, like the right now we're into the like 3rd generation. So, you know, even the mother plant and the father plant of the current generation, I can look at and be like, yeah, I made the mother plant and the father plant. And, you know, it just gets to the point where that's just not even a thing, as far as I'm taking over marijuana that way. But I don't like them in the marijuana space whatsoever one bit. And the fact that they're in these ETFs, I mean, what can you do? How successful is Scott's going to be, or is Hawthorne even going to be? Who knows, you know? But if they do, you know, you can look at what they can be capable of. All right, what would that mean if you own Sunlight Supply? They also bought up some other fertilizer companies like General Hydroponics and I believe Botanicare. What can they do? What are they capable of doing? Well, with what I just said, in Sunlight Supply, they could set up a warehouse, grow, completely automated from top to bottom with no need to ever go to an outside source for equipment supplies or growing supplies. And, you know, there you have it. I would streamline the whole thing. So if they did want to take over a big market share of any space of growing and doing things post-production, they could do it no problem. They got everything they need in their toolbox. Anyway, we'll move along. Curious, however, tobacco giants like Philip Morris and Altera Group MO have dragged their heels on investing in cannabis assets, even though their vaping devices and e-cigarettes could easily translate to marijuana as well as tobacco. Okay, rising tides lift cannabis stocks. As all told, the rapid-fire pace of acquisitions and partnership announcements has buoyed marijuana stocks into astonishing heights this month. Since August 1st, Canopy Growth stock price has risen 79%, while Hydro Apothecary has risen 30%. Trickle-down effects extended into Canadian-listed marijuana companies not explicitly making headlines as well. Aurora Cannabis has gained 35% since August 1st, Euphoria has gained 42%, and Kronos Group has gained a whopping 108%. And this is since August 1st. Those stock price increases have in turn lifted MJ, which has considerable weightings in these outperforming stocks. For example, 11% of MJ's portfolio is in Canopy Growth, while 9% is in Kronos Group. And I'll be going over a little bit bigger list. In fact, I have the list of all of the holdings in their ETF, which I'll go over in a second here. But yeah, this is the main beef of the ETF right here. Canopy Growth, Kronos Group, Aurora Cannabis. They have over 8% of each of those, and that's the top three Canadian marijuana publicly traded companies. And then beyond that, you have GW Pharmaceuticals, who, as you know, just got the patent for their CBD Epidiolex medication for seizures. And we'll get into that in a second too. This is going to be a long video, guys. So if you're not into this kind of stuff, then you might want to do something else or go somewhere and watch a different video. But yeah, I'm going to go over this in detail, and I also will probably talk a little bit about the other ETF at the end of this video. But we are looking at all these companies, and I can just say right out of the gate that they're all Canadian, marijuana companies that are publicly traded. So moving along, I'm sorry about the internet. I don't know what's going on. Is this what happened to net neutrality? Like now every time I click the damn button, I gotta wait, or is it the spying? It has to go through the NSA before I actually get the web page to load for me. Like they gotta okay it or get a snapshot of it before it gets to fully load. Anyway, so with all this excitement powering MJ's underlying stocks, money has begun to trickle back into the fund, which experienced relative flows drought for most of 2018. And like I said before, that's because of every time a headline happened, those very volatile stocks. These headlines are like the U.S. headline. Jeff Sessions torches the Cole memo. And on that headline, Canadian companies like Kronos and, Canopy and Aurora stocks just boom, just went down. And I had people that asked me earlier on, like way back in 2016, early 2017, hey, what are some good weed stocks to invest on? And I was like, probably Aurora and Canopy for sure. Those are going to definitely be good. They're going to be winners. And of course, since then, the stocks have went, several dozen doublings. And, well, I don't know about that, but it was really cheap back then. Let's just say that. And then, they probably were kicking themselves in the ass for not buying any. And then anytime any bad news came along, they were just like, oh, see, that's just a loser. But you couldn't even say that. By the time Sessions torched the Cole memo, the stock dipped then, but it was already way more, even at the lowest point of the dips, it was still more valued than, than what it began as. It was very, I feel like kicking myself in the ass to this day for not buying Canopy when I was telling people to buy it in 2016. That's all I'm going to say. I'm going to be done talking about that. So anyway, back to the article by Laura Krieger from ETF.com. When MJ launched in its current incarnation back in December, a deluge of money entered the fund quickly. Within 30 days of its launch on December 26, 2017, MJ netted $359 million in new investor assets. Yet by February, flows into MJ had begun to slow, drying up mostly completely by the beginning of March. Since March 1st, MJ has taken in just $25 million in new assets, $18.4 million of which entered the fund just within the past 7 days. For most of 2018, MJ hoovered between $360 million and $390 million in assets under management. As of Tuesday, however, assets in MJ had risen to $425 million, and guess what? As of today, we're looking at, for God's sakes, we're looking at $491 million, and that was actually of 9.6. The question remains as to whether MJ's current outperformance is sustainable. On a year-to-date basis, MJ still lags the broader market, rising 4.3% compared to 9.5% for the SPDR and S&P 500 ETF Trust, the SPY. Ultimately, MJ's fate and the fate of its underlying stocks rest on legalization. Still the biggest obstacle impeding growth of marijuana in the U.S. Though several states have legalized recreational and/or medical marijuana, federal government still considers it illegal to conduct marijuana-related business transactions. That may seem to just a matter of semantics, but has real-world implications as virtually no federally licensed U.S. bank is willing to break federal laws and risk potentially losing its FDIC insurer or charter. As a result, most pure play marijuana companies in the U.S. still struggle to secure financing or even maintain a corporate bank account. The vast majority of marijuana-related transactions still take place in cash. This very legal risk led many banks to refuse and continue to refuse to custody stocks for potential marijuana ETF. MJ only came to the market when the fund's investment advisor ETF Managers Group changed the index on an existing fund, effectively circumventing that fund's custodian. On August 20th, Wells Fargo terminated the campaign account of Nikki Fried, a candidate for Florida's Agricultural Commission, after it came to light that Fried had accepted donations from the medical marijuana industry. And I just read recently that another bank also pulled out on her because of the same reason. And I don't know what that is right off the top of my head. But anyway, when pressed, Wells Fargo confirmed its decision to terminate the account, saying it was seeking to comply with federal law. So I guess hush hush to your corporate bank account holder if you somehow, used your bank account in a transaction to buy some of this MJ. But anyway, we have another update that was on August 29th. We have an update on that story. Oh, come on. By Laura Krieger. This one just dropped on September 7th, which was yesterday if you're watching this as I put it out. And yeah, ETF of the week. The last one, remember, this one was called Top August Performers. So that was basically like ETF of the month was MJ. ETF of the week, marijuana stocks surge higher. Last week we reported that the ETFMG Alternative Harvest ETF, stock ticker MJ, was on a tear. And it's showing no signs of slowing down. Over the past month, MJ has surged 31%, making it the best performing ETF in the U.S. by far. In comparison, SPDR S&P 500 ETF Trust Fund, the SPY, is only up 2% over the same period. Oh, that is pretty fun. I mean, there's the chart for that right there. Anyway, we're not going to read all that, but anyway, outperformance has once again lured investors back to MJ, which has seen a drought of new investment money for several months. When MJ launched late last year, it attracted a flood of investment, fairly quickly pulling in $359 million in assets in its first 30 days. By March, however, the new net flows to the fund mostly evaporated. In the past 2 weeks, MJ attracted $56 million in new investment, bringing MJ's asset under management to just under $500 million. Whether MJ can sustain its upward trajectory for the long term, however, will ultimately depend on if and when the U.S. decides to legalize marijuana on the federal level. Doing so would resolve banking issues that have so far prevented marijuana companies from accessing the U.S. banking system, in which fact has also prevented additional marijuana ETFs from attaining approval from potential custodians. So that's it from Laura Krieger. Thank you, over at ETF.com. And here's a snapshot from Fidelity Investments. As you can see, right around here is when people started asking me about individual stocks, and I really didn't have any answers for them, except for Canopy and Aurora, of course, because I mean, it's obvious that those mega companies that practically ran monopoly on medical marijuana, it's pretty obvious that once they started getting the contracts for the weed from the government of Canada and investment money was already pouring in, to me, back in 2016, I was like, yeah, that's probably a good investment. Why wouldn't it be? And now you're looking at, this is the ETF, and that kind of performance that's pretty impressive, to say the least. And but if you think about it, it's only the beginning, and that's my insider trading little tip there, because there's no way that this isn't going to double eventually, and we're at 34 right now. Let's just say we're at 34. There's going to be maybe a couple more little bumps in the road, but this thing's going to double. All right. Trust me. You just got to believe that. Now, what's the highest it's ever been? This is some of the highest it's ever been right here, like up in the 38 zone, 39, 39.20. Can I get a 40? No. But yeah, so it got as high as like almost $40 at one point. And this is, after the Sessions, or right before the Sessions Cole memo news. And then when that happened, everything kind of went down. But then everything kind of hovered around this area here. And I mean, at one point, this went way down. We were down here in the 26 zone, right before this big uptick. All good news for this ETF. And what is this ETF? Well, here's the companies that they hold right now. And actually, when I say right now, this is old, all right? But this list is pretty solid as far as what they actually still have. And you got your Kronos. I think since this list has been made, that they have more Canopy and Aurora than Kronos, if I'm not mistaken. I just had their webpage up too. Sorry, I don't have their webpage. I'll put a copy of their webpage to this ETF on in the description below. Maybe even some of these other articles or whatever. To be honest, all you got to do is search MJ, if you want. You can put this whole ETFMG Alternative Harvest ETF in there if you want and search it, and you will get a lot of articles about this. This is a very hot topic in the investment world right now, and for good reason. All these companies are on fire because of the investment from these different alcohol holders. But there's more news. So as you look down the list, there's a few things that I've pulled just to kind of highlight some of the things that I'm gonna be critical of or whatever. But what, like I said, what are you gonna do, And I'm guessing that if America legalized weed anytime soon, then some of the companies that would be able to go online, the bigger companies in America, like MedMen or whoever else, those kind of things are going to start showing up on this list, and other ancillary American companies that, just because they're ancillary to the marijuana industry, sometimes can't get proper, federal funding or banking or taxing or any of that. So my first criticism is the Scott's Miracle-Gro, which, in case you didn't know, they're connected to Monsanto. And in case you haven't heard, Monsanto is getting sued. I mean, it's kind of hard not to, you'd have to hide under a rock to not know that, because the number of lawsuits against Monsanto increased from like 6,000 or some shit to 8,000. And one of those lawsuits just came in. The guy won $300 million. All right. And this isn't going to stop, because Roundup is garbage. Glyphosate does cause cancer. If you heard that it doesn't, that's because you heard one of the doctors that did a study or whatever for Monsanto. It's complete bullshit. So Monsanto and the government, they've been corrupt marriage partners. The revolving door between Monsanto and the federal government and local state governments has been an ongoing obvious thing. If you want to characterize it any other way, you can, but it's quite obvious. Like, I can put together a list of people that were actual representatives in public office that actually were board members of Monsanto. Lawyers for Monsanto. Hillary Clinton was a lawyer for Monsanto. And Monsanto, by having their hand in the government that hardcore, has controlled many, many things. And as far as like getting regulations catered to their, every whim. So anyway, they're a they make seeds. That's one of the things people never talk about, is they make, genetically modified organism type seeds. And to me, that's not going to be going too good if they get too deeply involved in the marijuana industry. That's all I'm going to say. So anyway, this is just in case you didn't think Scott's Miracle-Gro was a part of Monsanto, I guess is why I pulled this up, because here it is, Monsanto.com. Monsanto Company and the Scott's Miracle-Gro Company, the leading marketer of branded consumer lawn and garden products. And they're talking about, in addition, Scott's Monsanto is exclusive agent for the marketing and distribution of consumer Roundup. Aha. So Monsanto themselves sells Roundup industrially to big industrial farms. But when it comes to just the little bottles of Roundup, Scott's Miracle-Gro has your back. Monsanto Company and the Scott's Miracle-Gro Company announced they've extended their nearly 2 decades-long partnership in the lawn and garden market. That was from Seed World. Big Buds magazine say General Hydroponics in bed with Scott's Miracle-Gro. Yeah, well, they're owned by them now. And this is from GMOFreeUSA.org. The Scott's Miracle-Gro Company has partnered with Monsanto to create genetically modified Roundup Ready Kentucky Bluegrass. See, I mean, this is the kind of shit they do. And then we have from Reuters, I mean, the Scotts Miracle-Gro Company, Scotts Miracle-Gro Incorporated, on November, blah, blah, blah. The company is an agent of Monsanto. Please boycott the following lawn and garden brands. And then there's a list, including Scotts Miracle-Gro, Scotts this, Scotts that, Ortho, Scotts Weed Be Gone, all of it. Do not use those products anywhere near my cannabis plants, please. So anyway, I don't know. I mean, and one of the things I seen in here, where was that? I think it was from one of the investor. Oh, right here. So not too long ago, in May of 2017, the Motley Fool asked, should Scotts Miracle-Gro stop selling Monsanto's Roundup? And this was before that $300 million lawsuit came in. That was only a month ago. But yeah, and they also ask, is this a good buy or not, you know? And they still say in here that no matter what, Scotts Miracle-Gro should still be a good buy. I don't like it. I don't like Bayer either. And if you know, one of the other big things that happened recently was the merger between Monsanto and Bayer was okayed. Yeah. Anyway, we'll move along. Turningpoint Brands is another one that is on the list here of holdings. What is Turningpoint Brands? Turningpoint Brands deals in other tobacco products as the owner of Zigzag cigarette papers and cigar wraps. The acquisition of International Vapor Group gives the company a means to sell vapor supplies directly to consumers, according to a news release. Now, I also looked, and Scott's was down a little bit, but nothing to worry about. Turningpoint Brands, their stock has been up, and in fact, it went up like $1 or more just today to close out the week. So they're, that's Zigzag. Zigzag's on the list. And then we have GW Pharmaceuticals. Now, this article here is about why did GW Pharmaceuticals stock actually go down after they got their marijuana drug patent, or whatever, FDA approval and all that. And this is back in June from also the Motley Fool. And basically, this is what it boils down to, guys. Another likely reason GW Pharmaceutical stock didn't enjoy a solid bounce on Monday is that the biotech now faces a hard part, achieving commercial success with Epidiolex. Actually, there's been a hurdle before commercialization that GW must clear first. Epidiolex must be scheduled by the U.S. Drug Enforcement Agency, a process that can take up to 90 days. Well, we're expecting that any day now. So GW Pharmaceuticals will probably begin marketing Epidiolex in the U.S. in early fall. There are 3 keys to achieving commercial success. First, payers must cover Epidiolex. Second, physicians must prescribe the drug. And third, patients must want to take Epidiolex rather than use medical marijuana instead. That's going to be the hard one. As for patients potentially taking medical marijuana instead of Epidiolex, GW Pharmaceuticals CEO Justin Gover pointed out that the costs of using cannabidiol CBD oils at the therapeutic dosage provided with Epidiolex is really high. Yeah, but so is you're proposing like $30,000 a year for your product. But I wanted to highlight that he said that because a lot of people are wondering, well, why is the FDA and the DEA having their little war against CBD then? Well, that's because if you can grow CBD in your backyard, then these guys are going to have a lot harder time selling their product. Their stockholders are going to be pissed. And guess what? That's who the DEA is out to protect, stockholders. They're not out to protect patients that need CBD. No. And they're not out there to kick your door in and arrest you because CBD is dangerous. No. They're just there to keep the market value really high on CBD products. So A, yeah, they can undercut you with their products, and B, you know, nobody's going to even be able to afford. I mean, think about it, dude. You go to the store and at the dispensary, and CBD products are off the shelf high. The price is high. It's ridiculous. But as you can see, with all the talk being what it is, their stock did go up $1 on the day, $1.60. No, I mean $2.31, which is 1.6% increase on the day. So they're not hurting. I don't see them like really being affected too much by legalization or expansion of medical marijuana markets with this product. And the reason I say that is because they're going to find a nice little niche in this market. And that niche is, there's a lot of people who live in states where, you know, it's still prohibition, and the doctors aren't willing to let kids do medical marijuana for epilepsy unless they've quote unquote exhausted all other you know, options or whatever. That's what I've heard. So if you have that situation facing you, then you're going to go to the Epidiolex. So the growth of Epidiolex and the success of it is going to be kind of, you know, the growth is going to be sluggish. If anything, it's going to be very anemic. And at the very best, they're going to get a lot of those customers that just don't believe in whole plant marijuana. There's a lot of propaganda out there, and that's what they're relying on. And that's why the FDA and the DEA are still going after CBD, and that's why states like California, Michigan, and others are talking about, oh, you can't get CBD, hemp-derived CBD. That's not allowed anymore. We don't like that. We only like CBD if it's stamped out in a prescription bottle now. It makes absolutely no sense. And the FDA says it's because, oh, you can't put a medical claim on something and sell it unless we say so, unless we okay it. And okay, so we don't need to put claims on advertising or bottles. People already know what CBD is. So that's my advice to people that make hemp-based CBD. Who cares? Don't make any medical claims. We know what it does. These are the guys that are going to have to make their sales because they got stockholders, remember? Last time I checked, my plants didn't have stockholders. So that's the situation with GW. And then what else do we got? Incest Therapeutics. Remember those guys? Guess what? They're on the list. In fact, there's GW up there. Incest is rather low on the list, kind of. And if you look at the percent, it isn't that low because they still are up there with the 3% of the holdings. But the problem is incest isn't exactly like, they're not exactly killing it, but they're back. You know what I mean? And it's weird that they came back because last time I seen, all their bosses got arrested and the CEO got arrested for all this shady business practices that they did, where they were basically like bribing doctors and lying to the insurance companies on the DEA in order to get people that didn't even have cancer to be prescribed Subsys, which is like a I think it's is it a spray? Like I think you spray it under the tongue, and that's fentanyl. But anyway, all that aside, what is the cause of this sudden surge in August? Because they jumped 40% too. And last time I checked, Coors and Guinness weren't investing any money on them, or were they? So they jumped 40% in August. The biotech's massive valuation change came from news about a settlement with the U.S. Department of Justice, which seems completely reasonable, followed by a not so reasonable increase in as shorts covered their positions at the end of the month. So what's this? I'm not an expert, but I think that means all the people that sold when they started getting scared and things started going south, well, things did go south and the stock was way down. And then all those people that sold them when they were high came back and was like, I think I'm going to buy all this shit when it's cheap as hell. And the reason they did that is because they knew something. What did they know? They had to have some kind of insider knowledge, in my opinion. So if you think I'm doing something illegal by telling you like what I think about my insider knowledge, these guys had people that had specific insider knowledge. And here is proof right here. Man, I can't see any of this. Let's just kill that. Anyway, it's right here. Remember how the DOJ investigation about sales and marketing of Incest opioid drug, Incest, has been hanging over the company, Subsys, which has been hanging over the company since 2013. So the announcement that Incest would only need to pay $150 million over the next 5 years reduced the risk of a larger fine. And considering the company had already set aside $150 million last year to cover the major expense, the settlement wasn't a cumbersome financial hit. No, not at all. Because if they plan on waiting to pay it over the next 5 years, then they basically can invest that money and make it back. They got 5 years to do it. Anyway, that sounds really shady, that somehow the fine was exactly what they had to cover a fine. And these guys made a lot of money. They made way more money than $150 million off of this scam. Don't tell me they didn't. The end of the month rally was a little more dubious. Incest received fast track designation from the Food and Drug Administration for its epinephrine nasal spray. The designation is arguably worth something since having it can speed up the drug development process, but it's hard to see how it's worth the 34% one-day increase the biotech experienced. And I agree, that's just weird. 34%, but then again, the massive jump probably resulted from short sellers who bought to cover their short positions, as evidenced by the share price slump the following day. And why would they do that, though? Like, why would they be all of a sudden like, oh, you know what? I used to have 5,000 shares of Incest, but I sold 4,000 of them when it was looking bad. I got out, and then now it's like, now everything's on the floor, and I'm going to pick them back up for basically like pennies on the dollar compared to what I, made off them and shit. They had to know something. They had to know that the tide was churning for that to be worth it for them to even recover those. They knew the settlement was coming. It was basically all this news at once. That's my opinion. We're going to put a bow on this whole situation, guys. This clip's getting a little bit longer than I wanted it to be. But I hope this was educational. And once again, my advice is if you want to play around with a little bit of investing in marijuana stocks, these ETFs are good because, it's not like you're putting all your eggs in one basket quite literally. You're basically putting your egg in a basket that has a bunch of other baskets making it up. Does that make sense? I don't know if you know what an ETF is, so I never really said what it was, hoping that you would learn what it is if you didn't know, just by me telling you about what was involved in this one. And again, this snapshot kind of gives you like hey, these guys, this ETF has a bunch of money that they're investing in all these companies that are all marijuana related. Well, to a certain degree, anywhere from they actually grow plants and sell products to you know, hey, we own some grow lights and shit. So, and this is all the companies. Like I said, most of them are Canadian, and most of them are Canadian if they're related to marijuana directly. And then some of the, like I said, one of the weirdest ones is these tobacco people. But it's pretty understood in the marijuana industry, on the investment side of it, that tobacco is coming around sooner or later. And when they do, it's going to be good for everybody, including the tobacco people. And with Philip Morris, clearly what you're doing is you're looking at how they're going to pivot into the market without losing federal acceptance, I guess. So here's some other big news. Now we're looking at MJ so far, and it was sitting on about $500 million right now. Well, this other ETF already passed $1 billion. So the Canadian listed marijuana ETF Horizons Marijuana Life Sciences Index ETF, or HMMJ, has passed the $1 billion mark in assets. Marijuana ETFs have soared in the past month. Let's go ahead and read this. And this is from CNBC. Eric Rosenbaum. The investing market was abuzz this week when Fidelity Investments new no-fee index funds reaching near $1 billion in assets, but it took Fidelity 2 funds to get it done, while a single Canadian marijuana ETF passed the $1 billion market this week on its own. Now, I'm going to say that the 1 year what do you call it? ETF servicing fee is 0.75, which is higher by about 3 times than most ETF service fees. Now, again, I'm not an expert and I don't know this from experience. This is just what I read in another article when I was looking into this a couple of days ago. So that I found that to be kind of a little bit offsetting, but I mean, if the margins are high enough, that really shouldn't make too big of a difference if you have a nice amount of stocks. All right. But anyway, the Horizons marijuana, and if anybody hears me say anything that they feel like isn't good, or they could give better advice on, or they know more about whatever I just said, man, feel free to put it in the comments, because I'm trying to learn this just as much as everybody else. All right. Now, if you have a criticism about, people investing in these ETFs because of some of the holdings they have, that's another thing you can talk about too. Like, I'm not trying to live in a bubble here. Like, I want to hear what people's feelings are on this. So anyway, this ETF tracks companies' activities in the marijuana industry. As of September 5th, it was above the $1 billion mark. Canadian, to be fair, that translates to a little more than $758 million in U.S. currency at the current exchange rate, but it's still considerable growth for an ETF that launched in April 2017, just a little over a year ago. While marijuana stocks have been volatile, their performance has taken off in the past month since liquor giants Constellation Brands announced a $4 billion investment in the marijuana company Canopy Growth. Molson Coors Brewery and Diageo also have taken stakes in Canadian marijuana companies. HMMJ is up 43% in the past month, according to Morningstar. The U.S. listed Weed ETF, ETFMG Alternative Harvest ETF, or ticker MJ, was the best performing ETF in August and is nearing $500 million in assets. Although up 28% this month, volatility led to only a 6% year-to-date return. HMMJ is up 22% this year. And again, I say that's kind of a little misleading because of the fact that it started out at, I think it was like 30, and then it kind of went up and then went down. And it was kind of teetering in the lows. It was down almost all year. So overall, HMMJ holds 40 stocks with a focus on medical marijuana, but it does not reach with some of its holdings, such as fertilizer company Scotts Miracle-Gro, its 6th largest holding. Though Scotts Miracle-Gro did buy Sunlight Supply, the leading U.S. hydroponics distributor, Last April, several of its holdings are drug companies working on synthetic marijuana products such as Incest Therapeutics, best known for its controversial opioid painkiller Subsys. Over the past year, we've come to better understand the cannabis market, the tremendous growth opportunity it presents, and Canopy's market-leading capabilities in this space. Constellation Brands CEO Rob Sands in a statement announcing its $4 billion investment. Horizon's management team said in a statement Friday that assets far exceed our expectations and pointed to the anticipation of Canada's upcoming recreational marijuana legalization. It also said the investors may be opting for ETFs over individual stocks since, quote, nobody knows for sure which companies will truly be successful over the long term or even get swallowed up. And that's another thing to watch for, is as these mergers happen, you're going to see maybe two big mergers and, two big companies merge together. If that happens with some of these companies, it's going to be a little suspicious, because some of them are really big. If an Aurora and Canopy was to merge, that's almost a monopoly. Same with Kronos, they're huge. But overall, you're going to see some acquisitions, and there's a lot of marijuana penny stock type companies that could get sucked up in that. So you just got to be careful if you're just investing on individual companies. You got to ask yourself, is it really worth it to take a ride with them that might end up in a car crash? And it's probably not because of stone driving. But as the rhetoric gets ramped up about legalization, you will still see whatever kind of prohibitionary tactics and rhetoric and, the reefer madness. In order for these stocks to remain on the uptick, these companies have to remain profitable. And a lot of that has to do with the price of a gram. And a lot of the price of a gram has to do with whether or not black markets are still alive and well, giving legal markets that kind of extra boost of market value just because, it doesn't make sense. You might be saying, well, what are you talking about, Brandon? It seems like legal markets can drive prices. Yeah, that's true if legal market prices were lower than black market prices. But black market prices can stay a little bit below legal market prices no matter what. And it makes legal market prices kind of be a firm thing, because they can't go too low. They're only going to go as low as they have to. Just keep that in mind at all times. So all that has to play in to the overall big picture. And enforcement of things that are still considered prohibition or even regulations that might be a little bit designed to prevent a massive amount of home growing, or regulations that are designed to essentially make it so smaller companies can't compete against the bigger companies for many reasons, not just the price of a gram or the price of an ounce or whatever, or a pound. So, that's kind of the picture we're looking at in the snapshot of this ETF. That if you are planning on investing in cannabis, it's definitely one of the safer routes. And if you're talking about long-term investment, my final word on that, I guess we're not going to load any more web pages. But basically my final word on the long term is that eventually there's going to come a time when there isn't any more growth available, because there will be legalization. There will be spikes then, especially if America decides to finally put cannabis out of the Controlled Substances Act. You're going to see banking, you're going to see investing, you're going to see all the same stuff that you just seen in Canada, you're going to see it here. And there's going to be another spike in October on the 17th when Canada moves to full legalization, or what they call full legalization. So, I don't know. Like, a lot of people probably looked at this video that I'm in and thought about the fact that I'm talking about this, and they're like, wow, if this dude's talking about, maybe there is something to this. Well, I'm only doing this video because people continuously ask me about this shit. And, I've pointed them in the right direction, and I didn't take that advice myself, kick myself in the ass. I did that with Bitcoin too, by the way. But I'm also going to just say, right out of the, as a final thought to leave you with, this might be the last time that there will be an opportunity to get in this low on investing in all the weed companies at once. And I'm assuming, and I'm not going to fucking say that I speak for these people or whatever, but I'm assuming that the people that run this ETF are smart enough, the management team is smart enough to know what companies to adopt as America's laws change. It's really not going to matter until federal prohibition ends. But I'm assuming that they're going to have their heads on because they're looking at this and they're going to know who's who and what's what. So if you're opposed to the corporate takeover, but you still want to make some money off of marijuana, here's one way to do it, is invest on the corporate takeover, quite literally. All right, that's all I got on this, man. Sorry I took so long, but I really wanted to be thorough. If I missed anything, please let me know. Please comment. Please ask questions. We'll do another video about this in a couple months or something to try to put it in perspective. Where's the windows at? Well, the windows is you're not going to see too many more down bumps after now. This is it. From here on out, this is all going to be good news. And then until the day comes, when the news is going to start getting bad for these investments, is when they start talking about ending prohibition rather than legalizing marijuana. Because legalizing marijuana is this is the corporate takeover and the government trying to get a green rush out of marijuana. It might happen, it might not, but the fact that commodities that everybody that there's a huge demand for, that's something that's always going to attract big players and corrupt government people. Now, the thing I said about the price, of grams affecting things. Now, the thing is if the market for marijuana grows, which I don't know if anybody is anticipating that, because all the studies I've ever seen say that, yeah, people use more weed that smoke weed, but not more people start smoking weed after legalization. Maybe if the stigma goes away, that'll be different, and younger generations that don't know anything about the stigma, there's a lot to be said about that, but that's way off in the future. So that's super long term. I'm not really predicting for that, but I'm predicting that before that and after this initial green rush that happens after all the legalization is done happening, there will be a time when these stocks are going to start going the other way. I'll let you know when that happens, but in the meantime, it's really just a matter of more legalization. The more good news, the more these numbers are going to go up. And that's all I got, truly, for real this time. Peace out.